Namaste, crypto aficionados, digital capitalists in the house, and I brought you a great project today. But before I start, I just want to say I'm not a financial advisor, and please do your due diligence before buying any cryptocurrencies. Cryptocurrencies are very risky, and you can lose all your money, guys. Okay, I just want to say please like, please share, please subscribe to my channel, please hit the notification icon if you find my content worthwhile, right? So let's go on to the project today that I want to talk about, and today I'm going to talk about Lendify, okay, under collateralized secured loans on the Binance Smart Chain. Okay, so let's see what Lendify is all about. It's a protocol that allows secure lending, giving the much needed confidence to the lenders in a highly volatile crypto market. Secure lending options will open up lending opportunities for traditional and private lenders to access higher interest rates without getting direct exposure to the crypto market fluctuations. Lendify protocol cuts the middleman out of the lending process and eliminates the red tape involved with the lending and borrowing. This removes any counterparty risk between the borrower and the lender, who then can deal on a trustless basis. So Lendify, actually what it does is that, according to them, they want to changes the paradigm, right? And they provide under collateralized secured loan to buy digital assets. Okay, so the early innovation in DeFi with multiple major platforms like Compound, Aave, BZX have paved the way for the adoption of crypto lending and borrowing. However, the problem with these earlier offerings is that they are often over collateralized and targeted towards margin trading, hence intrinsically very inefficient in their usage of capital, and creates a barrier to entry for the everyday mom and dad lender or borrower. So, Aave and Compound, their model, okay, it's more of an over collateralized lending model. So if you put a collateral there, they will give you about 66% of value of your assets, right? It's similar to the pawnbroker model, right? You bring in 10k watch, right, and then you get they give you 6k for it. So they give you about approximately 66%, right? But most people are used to mortgage kind of model, where you put down a 20% deposit and they give you 80% to buy the property. Now that is called a under collateralized model. Okay, so the most compelling use case of DeFi is UCLs, okay, under collateralized loans, which are needed now more than ever before, given the rapid rise of crypto into the mainstream, with tech giants such as Facebook and PayPal now participating. So the simplest way to understand a UCL is by using an analogy to real estate ownership via a mortgage loan, like what we spoke before. And imagine only putting up that fraction of the house value equivalent as a deposit and getting a mortgage to finance the rest instead of paying the entire value of the house yourself. So when you wish to cash out the gains from your investment, you can sell the asset and walk away with all the profits after paying back the bank the borrowed funds and the interest. So now the same thing, but you just apply it to crypto and taking a loan to purchase a crypto asset such as Bitcoin, Ethereum, Uni, Link, Aave, or YFI. So say for instance that BTC is worth 20,000, but you only have 10,000 to invest and would like to purchase a whole BTC rather than half of one. But if you walk into your friendly local bank and ask for a loan to purchase BTC, they will of course flatly refuse you, right? So your more prudent option would be to take out a loan from a blockchain powered platform that offers UCLs. But who will lend that to you, and why would they? Okay, the interest that people receive in the traditional banking system is nearly zero. That's true. You go to a bank right now and you don't get anything, and in fact they're saying that it's even going at negative interest rates in multiple countries, where customers have to pay the bank to hold their money, which is a complete utter fallacy. This leaves people with little or no secure lending options where they can earn attractive rates of interest on their money. While it is easy for anyone to borrow money from the bank to buy assets like cars and houses, there are a few options available for the borrowers to invest in crypto assets. This major gap in the market remains untapped, and Lendify is bridging the gap in the market. Okay, so how it works is that I think I will show you a okay, but before that, the lender will receive a variable interest and be secured by the liquidity provided on the DeFi ecosystem in such protocols such as Uniswap. I just want to let you know that at the moment they are not building on ERC20, but they are on the Binance Smart Chain because Ethereum was expensive with all the gas fees and all that. So currently their testnet is going to be next month on the Binance Smart Chain, and then they're going to go mainnet I think in July. Okay, so continuing on, hence if the borrower is not able to maintain their loan, the protocol will ensure the lender is repaid and the borrower credited with the remaining equity. Borrowers can select from a wide variety of supported assets to invest by borrowing funds from the protocol. Supported assets can be added and removed via Lendify's decentralized governance mechanism, the DAO. So Lendify is basically a governance token, right? Lendify token is a governance token and it acts like a DAO. The base currency for lending and borrowing is USDC, hence making it more user-friendly and fostering mainstream adoption. Lendify has specifically chosen USDC because it is a safer stablecoin from a custody and reputation perspective, given its collaboration between Coinbase and Circle, and undergoes regular audits and is subject to regulatory compliance. So an example of how this works is a borrower deposits 50,000 BUSD because this is built on Binance as collateral into the protocol. Borrower loans 50,000 BUSD from the lending pool. Borrower invests into 100,000 worth of Bitcoin Binance, BTCB's Bitcoin Binance. In this step, the protocol will initiate a trade on PancakeSwap to change 100,000. There's a fee loan, so it minus off the fee and a small percentage BUSD into Bitcoin Binance, and then Bitcoin Binance is escrowed by the protocol. So case A, if let's say the price of Bitcoin now has decreased by 40%, so from the 100,000 it has gone down to 60,000, right, of the collateral, and so the liquidation is triggered, right? So if the liquidation is triggered, the Bitcoin is then swapped on PancakeSwap into 60,000 BUSD, and 50,000 is sent to the lending pool, and 10,000 minus the liquidation fee of a certain percentage is sent to the borrower. Okay, so this is in case of its liquidation. The money that is supposed to be held by the pool still gets back. The money still goes back to the pool. In case you're asking what happens to defaulters, right? So this is what happens if it's below the amount. If it's below 100,000, 50,000 is straight away sent back to the pool, and 10,000 is sent back to the borrower. So now case B is a reverse when the price of Bitcoin is increased by 50%. So he invested 100,000, but now the price of Bitcoin has gone up to 150,000. Okay, and the borrower closes the loan. So the Bitcoin Binance is swapped into 150,000 BUSD. 50,000 is sent back to the lending pool, and 100,000 minus the loan fee and all that is sent to the borrower. So this is how it works. I'll just go through the prices. So right now the Lendify, the coin LDFI, right, is 54 cents. Okay, market cap is still very, very small. It's just 2.5 million, right? Circulating supply is 10 million. Okay. It's pretty recent, and they have also got a partnership with Refinance. I was talking about Refinance the other day, And so going into refinance, by partnering with refinance, it allows them to enter into the Polkadot ecosystem. So that's one thing that you got to take note of. So they will be operating on the Binance Smart Chain as well as the Polkadot ecosystem. So, if you like this project, do take a look of, go take a look at it, and leave a comment below if there's any projects that I should look at. Uh, I think this is quite a good project. Have I bought it? No, not yet. I'm looking into it. Yeah. So yeah, so just comment and just tell me what other projects I should be looking into. And yeah, thanks a lot. Namaste. Please support me to grow my channel. Please like, share, and subscribe. Thank you.